Hey, my name's James Nicholson and welcome to my YouTube channel. Yesterday, the Federal Reserve had their meeting. Now, you might be thinking, I'm based in the UK. Why does that impact me? Well, it's really important to look at what the Fed are doing because there's a very popular phrase which is called follow the Fed. And that is exactly what the Bank of England does. So we look to America, we look at the Federal Reserve, at their central bank, to get some ideas on what we can expect for mortgage rates in the UK. And in this video, I'm going to talk about the impact of the Trump tariffs. What are their expectations? They are going to cut this year. I'm going to tell you how many times they're going to cut and much, much more. Now, if you're new around here and you haven't done already, please do me a favor and subscribe to the channel over there and hit that bell notification. We're so close to 40,000 subscribers now. I can almost smell it. So do make sure you do that. And let's get some views on this video and get some more exposure by smashing like, tickling like, doing something to that like button. That helps with the YouTube algorithm and helps the channel grow. And smash the share button, WhatsApp it, Facebook, or Facebook message the video to someone that needs to know what's going on. So, the Federal Reserve. Interesting stuff happening in America. Now, the Federal Reserve, they don't like to be political, and obviously they've got a difficult scenario on their plate at the moment because you've got Donald Trump saying he wants to get rid of Jerome Powell, who's in charge of the Federal Reserve. And then you've also got the Federal Reserve having to really look at what impact a trade war and tariffs could have on the economy. And so the Federal Reserve, they held rates yesterday, and so they have their rates in a range which is 4.25 to 4.5%. So this is the lower end of the range. The Bank of England is at 4.5%. So we have that little 0.25% cut that we could do and still be following the Fed, still be very close to where they are. And that's important because if we go way lower than the Fed or we stay a lot higher than the Fed, then the pound and the dollar will be impacted. And that makes import and export a little bit more complicated. And that's why we like to stick fairly close to what the Fed has done. So what else are they saying? Well, tariffs. That's what we've got to talk about here. And this was mentioned a lot. So I've watched the press conference after the Federal Reserve meeting, and most journalists brought up the tariffs. Now, the Fed, they don't want to be drawn into political conversations, but they did mention multiple times that the tariffs are going to be inflationary. They're already seeing that stuff happen at the moment. Even places that don't have tariffs on, businesses have adjusted prices upwards already. And Jerome Powell gave a great example of this. Last time Donald Trump was in power and put tariffs on, he put it on washers. So washing machines. So washing machines had tariffs on. That obviously increased the cost of that good. He said, but what also happened was the manufacturers of dryers also put their price up by a similar amount, and they didn't have tariffs. It was only washing machines that had tariffs, not dryers. And so the point of that is that by seeing an increase in prices, other companies, other products and services that aren't even tariffed are likely to increase their costs as well. And so that's what you will see. And that kind of happened with all this inflation. You had some price gouging from supermarkets and places like that and energy companies, and that's not great. So the Federal Reserve stance on this is that tariffs are going to be inflationary. You are going to see inflation rising in the US, and that gives them a difficult decision to make about cutting rates. So also, we'll talk about here the economy. And so the economy in America has been downgraded. The growth for the year was expected to be 1.7% on an annual basis, and that's down nearly 0.5% on what the original estimates are. So that's been downgraded off the back of a trade war and tariffs and uncertainty. What they're saying is a lot of businesses are really uncertain. Do you buy a load of stock now, get it in before the tariffs, or do you wait? Because obviously you've got to manage cash flow and stuff like that. So tariffs is a big thing. Rate cuts though, this is what you want to know about. They expect 2 times rate cuts this year. 2 more rate cuts this year. So each time the Federal Reserve cut, they normally cut by 0.25%. So they're saying rates are going to go down by 0.5%. What does that mean for the Bank of England? Well, that's fairly in line with what we've seen the Bank of England and the markets in the UK are expecting. The Bank of England will cut 3 times now. So if the Federal Reserve cut 2, because we've got 1 in hand already, they're already 0.25% further ahead than we are. We could cut 3 times if they cut twice, which is good. So that's positive, and we want to see how that one plays out. So the Federal Reserve are still expecting to cut 2 times this year. Now, could they cut quicker? Could they cut faster? Yes. They talked about that as well. They said there's 2 things that they're going to be keeping an eye on. One is the labour rate, as in employment rate. What does that stand at? Now, you've seen in the news, Elon Musk is cutting a lot of government jobs in America. And the expectations are that when you cut 1 government job, 2 other private-based jobs could also be lost, because that government job spends money in supermarkets, on taxis, on holidays, on gardening and all this sort of stuff. So there's less money going round in the economy, and that means other people will lose their job as well. And so labour dropping quickly would indicate that they will cut rates faster. So they're keeping an eye on that. So will we. Inflation as well. So if inflation starts to drop significantly, so the tariffs are going to put inflation up in America, but they've also said that could be a temporary thing. So there could be adjustments on that, and inflation could come down. If that happens quickly, then you'll see some more rate cuts as well. So that's important to see. They talked over and over and over about the main problem that they've got at the moment. They would be ready in normal circumstances to cut rates where we're sitting at the moment, but there's just so much uncertainty. And what they want to do is they want these tariffs to happen. Let's see what the implications are of that. And moving forward, they can adjust policy towards that. They don't see interest rates going up, which is good, but they could move down. And the expectations are that we will still get 2 rate cuts. So in summary, that's not the best news for UK mortgages. You'll get 2 cuts from America. That means you should get 3 cuts from the UK, and potentially that will be good, and that will be something that we are happy to see moving forward. Let me know, do you think the Federal Reserve is wrong? Because maybe they've got to keep secret about what they really think so they don't disrupt stock markets too much. Do you think the Federal Reserve is going to cut more than twice in 2025? Do comment below. And do smash the like button and share the video, and check out all the other content as well on the channel, including this video right here.